Hey guys, SGT here, and thanks so much for tuning in for another exciting interview, this time with Steve St. Angelo from SRSroccoreport.com. Steve, thanks so much for joining us.
Sure.
Let me ask you something. I know that you have been contributing quite a bit over at Silver Doctors, and now you have your own site. Why don't you tell people a little bit about your own website and what you're dedicating your time to?
I got interested in the precious metals years ago. I think I bought my first ounce of silver at $4.52 back in 2002, and I started that with Ted Butler, by listening to Ted Butler. But by 2008-9, I started getting interested in the energy aspect of what was going on, and I saw no one really looking at how energy was going to impact like gold and silver mining. So I started researching and writing articles about that. And I've been thinking about making a site here, and I've had a lot of people tell me I should start my own site. And then I actually had Jim Willie call me up on the phone, and he found out my phone number, and he gave me a call, and I needed to get my own site. So that got me into building my site back in the beginning of this year. So my thing is to look at what's happening in the gold and silver market, and also to explore how energy is going to impact the mines, the mining industry, the precious metals, and the overall economy. So that's my focus.
It's a great site. I suggest people check it out if they haven't discovered it already. I know Andy Hoffman goes to your site regularly and reads your updates. I also know that you just did an interview very recently with our good friend Dan over at Future Money Trends, and the name of that interview is The Inevitable Rise in Silver. It's the Energy Cost. And I'm going to put the link to that interview below in the information section, below this video, because it's an incredible 30-minute interview, and you guys get into detail about EROI, which is energy returned on invested, and I know that is extremely important to you, and I actually want to read this to the audience. You and I were exchanging emails recently, and you said this, and I thought it was very compelling. You wrote, "The EROI, energy returned on invested, is the simple equation that allows anything from a single cell to an empire to survive or perish. It was the declining EROI of the Roman Empire that ultimately led to its collapse. All the other so-called reasons, such as debasement of currency, high taxation, socialization of the wealthy, decline of morals, disease, etc., were all mere symptoms of the real disease, which is the falling EROI." And you wrote this, which was the most compelling part. "The falling EROI is what will destroy the U.S. empire with or without the Homeland Security State." And I think that's really interesting because you concluded that, quote, "all large entities, including the rich, will suffer in a falling EROI environment. Huge corporations and large conglomerates will not be able to survive this coming energy EROI collapse." Can you help people understand exactly what that means? And again, we've got the interview with Dan to really get into the nitty-gritty, but just give us an overall picture of what you mean.
Well, most people, when they're either farming, gardening, or either working, doing some kind of labor, there's a very small energy return on invested. So they take that energy return on invested, it's a profit, and they go out and buy something. And that's how the economy works. Now, let's say two bank robbers go into a bank, they have a couple of shotguns, and they walk away with $1 million. Their energy return on invested is like 1,000 to 1 compared to a normal laborer, which might be 2 or 3 to 1. So the Roman Empire was a version of the bank robbers. They basically went around and they had armies and they took over other countries and they absorbed their wealth. That's exactly the same thing that's falling with the United States. And we no longer can support our economy, and we got cheap oil from the Middle East, but now that's starting not to work anymore. So instead of trying to sustain our economy, we're printing our way out, we're buying treasuries, we're handing out social welfare. This is the way to try to offset the falling EROI. And it's going to impact not only the poor, the middle class, it will impact the wealthy. And so this is the thing where I'm concerned about Homeland Security like everybody else. I don't think it's right. They should be eavesdropping. But they're going to be in just as much trouble as everybody else is because there won't be the energy to supply that system in the future. And So that's something to look forward to, if that explains it for you.
Yeah, and it does. And I think that if we can focus just a little bit on the physical silver and physical gold market, let's talk EROI as it relates to mining. Because, well, first of all, we all know that silver and gold in physical form is a store of energy. It's a store of money, right? But it takes energy to get the stuff out of the ground, right? So silver and gold in physical form, are they not stores of energy?
What they are is stores of energy value. And I think Mike Maloney over there at Gold Silver, he said it correctly. Gold and silver are money because they're stores of economic energy.
That's right.
So when you've got an ounce of gold, you have economic energy, and as well as an ounce of silver. So a dollar doesn't have that. It's worth about 2 or 3 cents to print it. So so you really can't trade a dollar for its monetary value. You can trade it for its currency value. So that is the big difference, and that's why gold and silver have been stores of value, because there's all this energy value that's stored in there. And each one is a different level. Like right now, I think, 66 or 67 to 1 gold to silver. But back in the history, it used to be about 15 to 1.
That's right.
And the big reason for that change, besides other manipulations and controlling things that happened in the early 1900s, is because oil came on the market and totally destroyed the way silver and gold was being. It destroyed its ratio for value from, let's say 15 to 1 to 60 to 1 to 70 to 1 because of the way it was extracted out of the earth. A barrel of oil is worth about 18,000 hours of human labor. So when you start bringing oil into the market, you can really extract silver and much cheaper. So that's the reason why the ratios have fallen, part of the reason why. So the problem is now the oil situation, the energy situation is worse. It's peaking. So all these paper assets we have, Sean, that are out there will become increasingly worthless, and people will have to get into gold and silver if they want to protect some kind of wealth.
Okay, now I want to ask you about EROI as it relates to the current paper prices of, say, silver in particular. We know that the miners really can't pull an ounce of silver out of the ground for $18 or $19. Their hard costs may be higher than that. Certainly as it pertains to gold, their costs of energy expended are higher than the current paper price of gold. And, as it relates to that gold to silver ratio as well, we know that's a manipulated number because we also know that when they mine these metals out of the ground, silver is really only found at about 9.5 ounces for every ounce of gold they find. So getting back to my main question, as it relates to EROI for miners and for those who seek to pull these precious metals out of the ground in physical form, how is this sustainable when the costs of their energy is currently more than the value of an ounce of gold or an ounce of silver?
Well, that's exactly right. You brought up, unfortunately, derivatives. The financialization and the derivatives manufacturing in the last 10, 15 years has totally destroyed the ability to properly price commodities, goods, and services. We have no idea of what the correct prices would be in a free market. So we have to go by what this manipulated fiat currency system has created. And just let me give you an example. This just came out today. In 2005, the top 5 gold miners, it took them 12.7 gallons of diesel to produce an ounce of gold. Last year, it took them 25 gallons.
Holy cow.
It's doubled in just 7 years. That will keep getting worse. It's not the cost per se. I'm not concerned about the cost of the diesel. It's the availability. So here's a very interesting thing. The reason, back in the 1930s when Roosevelt confiscated the gold and then he revalued it to $35 an ounce, the energy prices stayed the same. Oil was still $1 a barrel. So all these companies were making a lot of money. 1970, the price of a barrel of oil in the 70s up till 79 were like $11. Gold went from $35 to $800. However, in 2000, in the decade of 2000, a barrel of oil in 2004 was $38. It's now $111. It's quadrupled almost in price, tripled, quadrupled. So the price of gold is trying to maintain its price in response to the increase of gold, in increase of a barrel of oil. And this is what a lot of these analysts out there that are talking about the price of gold is going to fall, they have no idea what they're talking about. Gold to remove from the ground is so much more expensive today than it was in the 70s or in the 1930s. They're not making any money at all. So that's the problem. The EROI of gold and silver are much less today than it was back in the 30s and in the 70s. So we need much higher prices to sustain the industry, or to even to keep the value.
Well, for anybody listening to this conversation, Steve, I mean, if they visited my site for any period of time, or your site, or Silver Doctors, or goldsilver.com, or Zero Hedge, they all know the story. We all know what's going on here with the paper manipulation and the paper Ponzi scheme in the economy at large in general. I mean, we know the Fed is propping up the market with $45 billion in U.S. Treasuries every month and $40 billion in mortgage-backed securities. I mean, the jig is up, right? The genie's out of the bottle. We know what is going on. But that said, do we know what's going on at the Comex? And I don't want to put you on the spot, but your latest article here called "Is J.P. Morgan Getting Nervous About Its Silver Inventories?" really piqued my interest. What do we see again? We see shenanigans between Scotia Makata, that's the bullion bank in Canada that Harvey Organ and his son Lenny had some trouble getting their physical metals out of a couple years ago. You can Google that story. And here we see Scotia Makata supplying physical silver to J.P. Morgan. And my understanding is you reached out to Harvey Organ to ask him what his thoughts on it were, and what did he say? And my understanding is you reached out to Harvey Organ to ask him what his thoughts on it were, and what did he say?
Yeah, he told me that he believes they're trying to. There may be delivery issues in the future, and just for those who are not quite familiar with the whole Comex system, the eligible category is any metal that's owned by an individual or party that is not. It's not deliverable. You can't deliver it to the market.
So those would be the segregated metals, if such a thing exists anymore, correct?
Right, if there is such a thing. And the registered is basically metal that is ready to be delivered to a party. And last week we had three big, and it's interesting, they were right at 600,000, plus or minus a few ounces. But each day, Scotia Makata transferred from its registered 600,000 ounces to J.P. Morgan's eligible category 3 different days. And the overall figure fell from 166 million ounces at the Comex down to about 163. But this is what else is interesting. I want to tie this into the Asian market. Since April, the takedown in April, the silver warehouse stocks at the Comex have been roughly the same, about 163 to 165 million ounces. However, the Shanghai silver stocks on April 11th were 1,124 tons. I just checked this morning, and another 18 tons fell off. And on July 30th, another 21 tons were removed from the Shanghai. So right now, the Shanghai silver stocks are at 536 tons. In just 3.5 months, it has declined 52%. So for some reason, the Asian market is removing silver from its inventories, whereas here in the Comex in the United States and in Canada, it's virtually the same. So there's a red flag there. Something very interesting is going on there, but I'm not quite sure why the Comex has the same inventories where the Eastern inventories are falling.
Well, let me ask you this then, as it pertains to the gold in J.P. Morgan's vault. I'm going off memory here, so correct me if I'm wrong, but I think I read recently on your site that the gold in the eligible gold in J.P. Morgan's vault has fallen to like 1 ton of physical, like 46,000 ounces. Is that correct? It seems awfully darn low.
Yes, no, that's correct. And we've heard that the J.P. Morgan is I guess they're thinking about exiting the bullion market, and so they have lost, a substantial amount of their eligible category. And then on top of that, in the beginning of 2013, the inventories of the Comex were 11.5 million. They're now at 6.9. So just in a little more than a half a year, we've lost 40% at the Comex. And a majority of that has come from the J.P. Morgan category. So I find that quite interesting.
Yeah, no, it's very curious, and the other thing that's curious is this claim that J.P. Morgan wants to get out of the physical commodities business, or whatever their most recent claim was that Zero Hedge reported on. It seems to me that they've made no statement that they plan to get out of their paper derivatives business, which I'm sure will continue to include silver derivatives and gold derivatives and paper selling. What's your take on that?
I agree, and isn't that interesting too that the Western banks, the Western vaults, they're getting out of the bullion industry, of the warehousing industry. But as we've heard too, the Eastern banks, they're opening up bullion facilities in Singapore and Shanghai. I guess I don't know if you heard, but they're getting ready to open up a 200-ton silver vault in Singapore. So it is interesting that as these stocks are falling off of the Western banks' vaults, they're moving to the Eastern banks' vaults, and they're opening more vaults where the Western banks are getting out of the industry. So I find that a very interesting trend, don't you?
Yeah, I do. And we know that people in Asia, we know that people in cultures throughout this world, maybe with the exception of Americans, very much value physical money, very much value silver and gold in physical form. I think that people in Asia, people in India, love to hold the physical metals, be it in the form of jewelry. In India is very popular as a form of wealth and a store of wealth and a showcase of personal wealth. And in Asia, people love bullion. We see people lining up around the streets at bullion shows and bullion shops and coin shops to buy the metal in physical form. So I think that's the big difference, Steve, between the American culture and just about all other cultures on this planet, is Americans have been so separated from their birthright of constitutional money, from real money.
No, and I agree, and I also, this ties back to the energy. I really do believe the Indians, the Asians, the people from the Eastern cultures, they understand, because they haven't gotten into the advanced modern society until very recently. I mean, when the gold was a big deal, the gold rise in the 1970s up to the 1980s, the Chinese weren't even involved in that. That was a Western phenomenon. So they understand the value of gold and silver. They understand its intrinsic monetary value, where unfortunately the folks in the West have lost that totally. And, we're living in the service economy, so we're even past that. At least, the Chinese, they're a huge manufacturing economy, so they understand the value of work, where here in the United States, people are working hard, don't get me wrong, but it's a lot of service. So that's a big difference I see. We have lost touch with what a real value, a physical value of producing things are.
Yeah, I completely agree. And, the people listening right now have not lost touch. I mean, we're still very much in tune. But, our listening base is, a small percent, a small fraction of a percent of the general population. And you're right, it's a 72% service-based economy at this point. We don't make anything. We don't really value the making of anything in this country anymore. It's all been farmed out. And we need to look no further than Detroit to see what's coming for us if we don't wise up and tie down these banks and, take our government back. And I think the reason that so many of us got into this space and started talking about the importance of owning physical metals, constitutional money, ending the Fed and taking our monetary system back from the banksters, Steve, is because we do value truth and honor, and we want to end the fraud. We do want to take our country back. And so regardless of the price of these metals, even when they're down at 18, 19, and everybody feels really beat up if you were buying silver at 40. The bottom line is it's a great way to store real value, real energy value in physical form that can't be printed out of existence by a group of criminal banksters. I mean, that is still the beauty of it, no matter what the paper price is.
I totally agree. That's why I'm such a big silver and gold. I believe in silver and gold because of that exact reason. And I've stated this before. Currently, the world has $85.2 trillion in global conventional assets, and those are all based upon a growing economy. And we actually aren't really growing. China's growing. Some countries are growing, but we're not growing. We're manipulating our GDP data to show that we're growing. So the problem comes down to what happens in the future from here. Yeah, presently the paper prices of gold and silver have been taken down, and they have been manipulated. I thoroughly agree that. The thing is, there is nothing really in the future that's going to hold its value as well as gold and silver, and that is real estate prices, whether that's residential, commercial, industrial prices, values. All these things in the future, all these assets that are based upon a growing energy base will not be able to be there. So at some point in time, you're going to see a transfer of wealth that has never happened before because the whole world is on a fiat monetary system. I can't give you a date, just like Andy Hoffman, I can't give you a date, but it's getting worse each month, each year it's getting much worse. So we're going to see this huge transfer because people are going to panic. They have to get into something that's going to hold their wealth. Digits in a bank aren't holding their wealth. It's a Ponzi scheme. It's an illusion of wealth. So when we see this huge transfer, not only will the price of gold and silver and their value increase, that's when we're going to see the miners. That's when we're going to see the value of the miners increase because the miners are actually the wealth creators of the world. They're actually the banks of the world. They're bringing gold and silver into this world, and that is what is part of the growing system. The banks today, J.P. Morgan, HSBC, Citibank, they're not banks anymore. They're leeches on society. So at some point in time, this whole thing will implode, and you will see the biggest transfer of wealth at that point in time. However, we have to be patient, don't we?
Yeah, absolutely. We have to continue to be patient. And, I think the importance of an interview like this one, Steve, is just to give people another glimpse behind the matrix, because you hit the nail on the head early on in the interview, which is we don't know what the free market price of physical gold and physical silver is because of the paper Ponzi and the manipulation. But one day we will know again, because the world can see what's going on here with these banks and this criminality, and sooner or later what can't go on forever will end, and this too will end. Steve, I want to call you SRS Rocco. How did you come up with that name real quickly?
Well, just that's my initials. You got the Steve and the St. Angelo, right? But my middle name is Rocco. So years ago, I started blogging, and I just used that as a screen name, and now I'm known for that. No one really knows my name except on some of the financial websites where I post and publish some of my work. So that's where SRS Rocco came from.
Well, we're sure glad you're out there, and everybody needs to check out SRSroccoreport.com, and we link to Steve's stories, too, with a read more link at the bottom, so you can get there by coming to SGT Report. Steve St. Angelo, thanks so much for your time. I really do appreciate it. It was nice talking with you.
Thank you. We had a great time.
All right, Steve. We'll talk to you again soon. Take care.